Good afternoon, everybody, and good morning, wherever this is getting broadcasted. So as introduced, I'm going to talk about how banks are likely to be changing their business models and also how their operating model will need to change. So I'm not going to talk about how we're going to introduce platforms and currency on Mars, but trying to have a more earthy conversation. It's been a lot of topics over these few days that has been extremely interesting, and I think that I'm probably going to echo a few of the messaging that has been done. And also listening this morning, for instance, to the Uniper presentation, I thought that also highlighted a few of the topics that I will be talking about. So the core of the presentation that I have is that I want to talk about how banks will need to change their business model, and also how other agents in the financial ecosystem are likely to need to do this change. So my presentation is basically derived in 5 different parts, where I'm going to be looking firstly in talking about what are the mega trends and the drivers on the market that is forming banking generally and payments specifically. And then I'm going to talk about the move to digital and the move to digital platform. And I think that there's a lot of things that has been neglected in this transformation, especially in the B2B space. I think that what I've heard over the last 2 days in this, we have predominantly been talking about the retail banking use case. We haven't talked so much about the business to business or the corporate use cases and how corporate banking is potentially transforming. And part of that reason is we are all retail customers, so it's easy for us to comprehend to retail banking issues and retail banking use cases. But I'm also going to try to cover as well the corporate banking segment, because that is where I truly believe that money is to be made, not only by fintechs, but also the large techs. And then I'm going to talk about these agents in this ecosystem and what this change will actually bring to them and what their respective model are going to be changing. And finally, I'm going to try to do some predictions around where I see the future winners and losers are likely to be in this new ecosystem. So firstly, I'm going to talk about what I define as a perfect storm and what it is required for banks to think outside the box or outside the 4 walls in transforming their business model. I think that PSD2 was mentioned in the previous presentation along with PSD1, the first payment service directive. And I remember when I started in this banking industry, and I've been doing payments and banking for companies like IBM and Visa for some 20 years. And I remember 15 years ago when SEPA was first introduced, the major concern for banks were around the fact that their revenue will be in decline. And that expectation was as well that once SEPA is over and the compliance around SEPA is completed, we then can go back to the BAU. I don't think that anyone 15 years ago could foresee the regulatory tsunami that we would see in the coming years. And that is what's been creating this, what I call the perfect storm. And as a company, I work for Finastra, who's a UK-based, and I'm personally based out of Dubai in the UAE. We reshaped our entire strategy a year back, where we were looking at how the total industry is changing. And we realized that we need to change, not for ourselves to become obsolete. Though we are one of the largest technology vendors globally, we see that we are facing a huge threat or being distinct with the next decade or so, just because of the changing landscape. And this perfect payment storm is what I usually use a pest analysis to understand, looking at what are the political, economical, societal, and technical drivers that are shaping the entire industry. A few of these were discussed earlier today, like the technology around blockchain. And I am a firm believer that blockchain is going to be a transformer of the entire industry. However, I'm not that great fan of crypto as a currency because I truly believe in the sovereignty of nations. And that's also another political driver that we are seeing today is that nations are getting increasingly concerned about sovereignty issues. We've seen the introduction of EPI in Europe, which is merely a way for the European Union and the Commission and the banks in the unit to try to counterfight the likes of Visa and MasterCard and to some extent American Express. We're also seeing Russia being concerned in trying to develop their own response to the dependency on SWIFT. So likewise, working also in South Africa. South Africa is taking measures to overcome the concerns they have around the entire sovereignty issue. So, and as well, on top of that, we have the move to real time, and we see as well that everything is becoming online and real time. And we see the introduction of open banking, PSD2 was talked about. That was a huge transformative point on the banking industry. So I usually as well try to drill down on what I see as the enablers. And the enablers typically are the likes of what I define as an API. I don't think that the introduction of API, which was talked about earlier as well today, is really a mega trend. API is nothing but a communication interface in my terminology, and I'm old enough to live with EDI, and to me, an API or using an MQ is mere a standardized way of communicating between platforms or agents in a platform. But APIs and the rise of APIs has been a transformative force in other measures, and not only in banking, because without the use of APIs, we would not have Google Maps as part of our Uber journey. We constantly consume a number of APIs just by opening any app on our phone today. And that's where now banking is now taking the presidency in trying to transform their distribution model using API and standardization of APIs. So and probably the last, and on society, so S in society in the pest analysis as well, that we also see now the entire rise of the new generation who have very limited trust in the current banking model, where they actually believe that they don't really necessarily trust their banking partner more than anyone else. Looking at my own 14-year-old daughter, she actually trusts iTunes as a holder of her values and storage of her value more than a bank. She cannot differentiate between Apple and a bank because the way that she perceives the store of value is so different from when I was growing up. And that entire focus on moving away from the trust with banks, because when I meet banking executives, they still stress the core value of banks as being the trust, being one of the core capability that banks has that is important and going to differentiate themselves in the future. I don't think that that's going to be as strong as one would expect going forward. So all these drivers are clearly transforming banking as we know, and we talked a lot about this, as I said, over the last 2 days. So what I want to focus this presentation is on the customer journey and the focus on consumers or customers, whether that is retail or corporate customers. I'd say that over the last 5 years, there's been a tremendous shift from analog consumption and consumer relationship to digital. Obviously, COVID been fast-forwarding that transformation. But more than ever today, we are procuring services. In retail, we buy our train tickets online on an app or a website, or we procure most of our goods as well on a platform. Today being obviously Black Friday, I would assume that the majority of consumers will be scanning their markets online rather than on a physical store. We also seen the big digital transformation happening in the B2B. And that's what we typically don't see as an ordinary consumer. An example of a B2B platform is one of the organizations that I work with is a pharmaceutical organization that has a platform where pharmacies can actually buy and procure their pharmacy to themselves, or in other ways procuring what they need into the pharmacies. Historically, the medical companies been selling sales agents to pharmacies to physically commission and sell these capabilities or these goods. Today, this is all moving into digital. And we see companies changing their entire business model. I met 2 years ago with one of the largest car manufacturers in the world, and they wanted to change their entire business model from manufacturing cars to providing journeys between A and B. This is a huge shift for this large organization to give up on manufacturing cars and have the focus on providing that journey. And in providing that journey, what they wanted to do as well is that they wanted to have a platform where they could cross and upsell other services needed to bring themselves from that journey, whether that would be an insurance for that journey or bringing music into the journey or procuring goods like pizza or petrol onto that entire experience along the journey. So that was a big shift of how they were moving. Another example is an insurance company that I work with in southern part of Europe, where they looked at their entire customer journey from bringing a customer on board to actually serving it through the lifetime. And here's the key credential that I see has changed with the digital platforms and digital journeys, is that the customer journey is never isolated to a banking experience. There is not a single customer journey that goes from A to Z on banking services. Banking is a capability used to support an overarching customer journey. That customer journey may be to go and procure a pair of shoes on Amazon, or getting my insurance, or taking my daughter through kindergarten to university, or for me to own and sell and buy my property and my house. That is the customer journey. So banks haven't really understood that they need to change the way that they perceive customer journey. I had a logotype with one of the banks that I was working with. They had themselves in the center, and everything else was centered around them as a bank, the customer and the business partners, the fintechs, and everything was set around them, but they were the epicenter of the universe. And that is the way that I want to see it, that the customer, whether corporate or consumer, they are the one that are in the epicenter of the customer journey. So, however, in these customer journeys, we need banking services as much as we need insurance, as much as we need delivery. I mean, today, when you do the checkout on Amazon, you're going to be able, probably, in most countries, to be offered a number of delivery options. There's a delivery as a service that is getting offered on checkout. You probably have this well when you're buying a package travel on TripAdvisor or anyone else to buy insurance. So there's a clear separation between, as an example, in the travel industry, you procuring your entire trip and sourcing it to the airline. Today, you may not even care whether the airline is Emirates Airlines or Ryanair. You're looking to buy the journey, and the provider is actually going to be pretty anonymous to you. And that leads to what I used to define as that there is a clear separation, and becoming a clear separation in banking today, between manufacturing and sales and distribution, where manufacturing is where the production happens. In the banking context, who is holding my money? Who is actually clearing and settling my transaction and my payment? Or who is actually holding the custody of my assets, whether crypto or shares or securities? So that's the manufacturing or banking. And the sales and distribution is typically the one that provisions the service and sells the service. We've seen this happening many years ago in the energy sector or in the telco sector, where in Europe today there are 6 companies producing 80% of all electricity. Whilst I would assume in Romania alone you would have dozens of different distributors and resellers of electricity. And that's what I foresee as well in banking, and we're going to get back to that later when I'm going to talk about the different agents, is that is how I see as well the banking landscape and their operating model being forced to change. Banks are going to be forced to move into manufacturing, and that means that they need to achieve scale. So the focus is going to be on the customer and the customer journey. And I think that understanding that and understanding what role each agent can play in that ecosystem is crucial to differentiate yourself. So, and the ones that are likely to be able to succeed are the ones that are, I use the term and I steal it, that are obsessed with their customers. This was an old Steve Jobs quote as well, that he was obsessed with the customer and the customer experience. So what we are seeing now is that, looking at this a bit crowded slide, is that I see a separation in the value chain between the distributors and the ones that are providing that customer journey. And the lower end are the manufacturers of these services. And you could see that actually holding accounts, providing payments and connectivity is a lower end service. And you would also expect in that layer that it would be very difficult to make an overwhelming profit. I foresee that banks in the future, the ones focusing on manufacturing, will be facing a single-digit profit margin, whilst the distributors would be the ones that would be able to provide double-digit profit margins, similar to the energy industry. And also the manufacturers are typically the ones that are getting scrutinized by public, regulated by governments, and supervisions for any obsessed process or profits. So understanding this landscape is then critical, and I used to group these different agents in the ecosystem in 4 groups. It is the core of the brands. Typically in the retail space, they are the retailers or the merchants. It could also be the actual corporates providing a platform. And the big tech, and slightly to some extent fintechs as well, is another group, along with the traditional banks, which I call the FS distributors and resellers, being almost the middlemen. So I see as I said, the traditional retail and wholesale financial services are likely to be able to need to focus on manufacturing. I would assume that we're going to see a centralization of the number of banks across Europe. And it's already started to happen, but I would see a continuous drive towards the consolidation of these players, and foreseeing that we're going to see a limit of maybe 12 to 20 large banks across Europe, whilst we today have more or less 5,000 or 6,000 different banks operating in Europe. And the role of the brands and the retailers in this is that they are eventually the final distributors in this ecosystem. Taking Carrefour as an example, they are the ones that are actually able to distribute these banking services to the end consumers. They are the one that actually owns the customer journey. They may not be the distributors or resellers, but they are the one that actually going to be owning that. It may as well be an insurance company who's going to own my journey on being an insurance customer for my car insurance. Or it's going to be the real estate agent who owns the relationship of me going through looking for houses to eventually procuring and potentially selling my house. That is a customer journey, and the brands that can be overly important. And I think that the traditional retailers and banks, their branding would become increasingly invisible in this new era. Then we have the big techs, and actually more the big techs than the fintechs. I believe that they will play, especially in the B2B space, an extremely important role. I've seen, and I've been projecting as well, the likes of Oracle and SAP be the future dominant players in the corporate banking space. Because take it as an example that most of you would know Ariba being part of SAP, who deals with a lot of procurement for their customers. And the way that SAP theoretically could do, and I've had conversations with SAP, is that they could actually be able to forecast any corporate's future spending needs based on this Ariba platform. And their ability would as well to be offering financing or payment as a service. And if they are actually sitting on the demand side, working with corporates and being able to address these needs for corporates, they would be able to be the big tech sitting between the manufacturers, the banks, and the end consumers being the corporates. And I think that their ability to collateralize invoices or to do cash forecasting and do financing of cash flow is a tremendous asset that they have not yet utilized. And that is where I think that the corporate banking space would dramatically change, forcing even banks' corporate departments to move. And I talked about as well, reaching to an end of this presentation as well, very quickly, is that where do I think that the winners and losers going to be? Obviously going to be very hard, and I think that definitely the winners would be the consumers. So the end consumer clearly will be the winner because of a greater choice, a greater service, and an improved customer experience. And ideally, I'm not sure, but ideally also a lower price for the services that they procure. But apart from that, looking into the ecosystem, I clearly believe that the big winners in the banking as a service transformation that we're seeing and the embedding of banking services will be the big techs. I think that it will be the Amazons and the SAPs or the Workdays who provides the technology platform for most of our customer journeys. I think that those fintechs today that are providing the end customer or consumer interface, they will lose out. They will need to redefine themselves and find new ways to serve this. And we've also seen that in recent years where traditional players, especially in open banking and fintechs, have moved from trying to get as a retail solution and have customers themselves to become a core technology providers to the retail brands or the embedders. We see in the likes of a few Nordic players that have actually done this leapfrog. And I think that that's where we're going to see a shift for fintechs not owning customers anymore, but trying to move into the embedders or to be the resellers of platforms into the end user platforms. Because very few fintechs are actually, especially financial services fintechs, are actually owning customer journeys. They are typically coming up with very isolated and discrete solution to a discrete problem. And I think that they need to find a way to embed their service onto these retailers or to the end customer journeys. And another loser is obviously going to be the wholesale FS providers. I think that it would be immense over the next few years who would be the winners. The winners in that segment clearly will be the one that runs an efficient operation that is low on cost and high on volume. So that would also force the smaller banks to either merge or being absorbed by the bigger. And I think that the terminology yesterday was used, or the big whales or the piranhas in the ocean. So this is how I see, at least over some 5 to 10 years, how the market will play out. And that the branding of these traditional banks will disappear, and the brick and mortar business also will disappear. And we will see an increased amount of embedders taking place in the market. So with that, I'm thanking for your listening into this presentation. And if there's any questions, happy to take them. And if not, I'm happy to take a huge applause as an end.